Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by and visiting the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and you're all welcome to visit the Bookmap Discord Trader Lab. The Trader Lab is a group of traders that have come together to leverage their collective experience in order to develop the business side of trading. In other words, a career path. It is about integrating Bookmap order flow tools with auction market theory, using a volume profile as a chassis for potential alignment. In addition, the Trader Lab is built upon structured trades, and these trades are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars that you can use to see various implementations of these structured trades over many different market conditions and development. The important thing about trading is to understand that it is more of a gaming process versus a prediction process. And most retail traders, at least based on my experience and what I've observed over almost 45 years of trading, think that it's about predicting what's going to happen next. Most of this is based on risk aversion, which is part of our instinctual wiring. So we make choices based on things we believe to be true, but they're true in the outside world. But in the world of trading, which is really operating in a random environment, those things do not apply. So really, it's about understanding the psychology that impedes us from maybe getting into the actual alignment with the business, that this is built on a business plan. It is built on the way casinos operate. That is a random distribution of outcomes, but only interacting with the participants or maybe the gamblers if you're in the casino when you have a statistical edge, accepting that random outcome because it's all random, but exercising structured trades that give you an edge over a large sample size. And if you can do that and have the discipline and emotional stability to actually execute when in a random environment, which means uncertainty, which provokes the emotional response to avoid risk, which is really, assuming you have an edge, our biggest obstacle to actually doing the job. Notice the casinos just deal the cards, and the gamblers do walk out with cash. Well, what does that mean? There's overhead in every business and cost of production. So if we can reframe the business of trading from the emotional aspect and needs that we have based on our primal wiring, we may have an opportunity to build a business, but it takes an understanding of many different elements in order to change, quote, your beliefs. And our beliefs are built on our experiences, but the trading business is the antithesis of the outside world. Anyway, thank you for visiting Trader Lab. I have to take care of some business. Grab a pen and a piece of paper. I'm going to be giving you some notes, and then I'm going to run as fast as I can because my time is limited. If you're interested in what the Trader Lab is about, there's a link in the bottom of YouTube that you can click. It'll bring you to Trader Lab, and the Trader Lab is a community. There is no cost to become part of the Trader Lab community. Take advantage of all the resources, not only in the Trader Lab, but in the Bookmap Discord server. Bookmap, as you know, is a high-tier order flow tool, and Bookmap invests in traders. It doesn't do anybody any good unless you can learn to trade. So imagine a company that actually invest in you. And that is not only the Trader Lab, but a lot of additional education, stocks, options, crypto, course order flow, algorithmic behavior, market maker behavior, options, etc., and a lot more. All this is available. And of course, the Bookmap Academy. If you subscribe to Bookmap, you can get individual coaching and mentoring, and even the opportunity for free Bookmap. And you can find out more about this. Click the link below. Check it out. And in my opinion, no cost is pretty darn good. General disclosure. All Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab your pen and paper. I'm going to give you a couple tidbits here. Now, time is limited. A lot of all of this is available in the Bookmap Discord Trader Lab community, but I'll give you the broad strokes. Now, let's talk about Friday. If you remember Friday, new all-time highs, having a great time, and then the market sold off going into the RTH close, and it left a big wick. If you're a candle finish aficionado, suggesting, well, it was profit taking. And actually, we had a lot of discussion about that in the Trader Lab, not after it happened, but before it happened, that there was a potential for this kind of behavior. This is part of understanding how the market works, why it does what it does, and how you might get in alignment with it. And it's really market phenomena. And one of the things traders are always looking for is to predict what the market's going to do. It isn't about prediction. It is about anticipation. Now, let's talk about, so we know we had a sell, we sold off on Friday going into the close. So let's go take a look at a couple of things. This is Friday. Friday's settlement. Friday's naked volume point of control. This is, and I always talk about this, and I have to give this, and I'll give you a brief overview of how the auction works. The auction is based on high volume and low volume. High volume, when you have high volume, think of shopping in the store. It's where buyers and sellers come together, and a retail price, so I call it retail, and this is for the whole RTH session on Friday. This was where most of the business took place. That is called a naked volume point of control because it hasn't been tested again in the RTH. But what it tells us is that was our price. Now, what happens? Think about this. If the market is higher in the ETH and we come down to a previous area that was accepted as retail, and we have the settlement, and then there's the ETH low. We test this area. Now, if it was retail, have you ever gone to the store and the price of your product you're going to buy, or here S&Ps, was, let's just use a number, $1. And in the ETH, the buyers and sellers come back to the dollar, and now that price is no longer fair. It's actually mispriced based on the current valuation that is developing. That means if this now was the retail price, it's like going to the store and they have the old price in the back and they put the new price in front of it. And unless you're able to grab this one, the new price is what's going to come. Now, we don't know this at the time what it will do. We know, if you understand how the market works, and this is what the Trader Lab is built on, that this is an important level. And if we check it and we don't take it out, in the ETH, this sets up a long. Now, obviously, sleeping, but that's not the point. The point is, when we come in this morning, we know this might be underlying too low. Now, let's move up the food chain. This is the overnight volume point of control, or ETH highest volume. Think of it like, oh, that's too low from Friday. This is now where the high volume is from the ETH, the new retail price. Now, I'm going to give you some statistics. Grab your pen and paper. We are opening higher, that means above the settlement, inside yesterday's range. This is yesterday's high, which was the current all-time high. So there's a couple possibilities. Let me give you the stats and you'll see what they are. And now the stats are not the primary piece. They are an ancillary piece. So the thing that's number one in all of this is, what is the behavior of the participants in relation to valuation? So if this is too low, remember, this is context. And if we know this is too low, unless we fall out the bottom, and we can always come back here. Remember, there's nothing, this is trading, right? then we know the possibility is to go in the other direction. So I'm going to give you some numbers here. Getting to the overnight volume point in control, which is retail from ETH, remember highest volume, 82% probability. Taking out the previous high or low, one of them, 81% probability. Getting to the previous close, which is below us, which we checked in ETH, remember this, 69% probability. Taking out the ETH high, 69% probability. Taking out the first hour's high, 67% probability. In my trade plan, this is what I had. Now, the fact I have a trade plan is not a prediction. It is based on what I think might happen. And then I have to adjust. So I'm going to take you now into the, there's one other piece that's very important here. I forgot this. This is the ETH. Whoop, hold on, there it is. The ETH. Now here's the overnight volume point of control, this yellow line. Remember, retail. What creates this? Rotations. This is a distribution. Chop, chop. And what does the market do? What's too high, which is the ETH high, and what's too low? Well, too low is the ETH low. But once we came up here and we started spending time, it was suggesting to me that the ETH low might be too low, and now this is the new retail price. High volume retail, if you want to think of it this way, is if the price gets too high and we run out of buyers, it's almost like go to your store and there's always somebody who's going to buy something at a high price. They need it. But if the volume tapers off, there's less buyers. That makes sense, doesn't it? Now, if we come back the other way, where's too low? And this, of course, is part of the joy of trading. I don't know where it is, but let's look at what happened. Remember, the ETH auction is over at RTH Open. This is too high. And now, in the current, this is called the distribution, and you guys can think of it as a consolidation. Here's the outside edge, and it's called a low volume node. There it is. I mark it on my chart so I know where the outside edge is, and of course anything can happen. I know where the retail price is, and I know where too high is. So that sets up the possibility for this or not. And again, it's all random. Write that down. Nobody can predict. Now, if you can, come to the Bookmap Discord Trader Lab community. I would love to be able to predict what's going to happen. But what I've found is that if I keep my mind open, I will be flexible. And if something changes, I need to be able to change with it. So it's not about predicting. It's about alignment. And I hope you're getting something out of this, guys. Please give a thumb up, by the way. If you're in YouTube, if you find this interesting. Hold on, I got to adjust a couple of things here. One moment. And if you have questions, please post them. I can't see them at the moment, but I will come up for oxygen. And please give a thumb up in YouTube, or thumbs up. It's helpful to the stream. Remember, the Trader Lab community, there is no cost. And it is for the business of trading and helping traders create careers in the business of trading. And there is no simple plug and play indicator that gives you the holy grail or ATM in the basement. So let's look. 82% probability, past performance, not indicative future results, we're going to get here. Overnight high, 60, whatever it is, I got to look here. 9% probability we get here. Now, so 82%, 60, whatever percent that we go here, and then all-time high above us. So I'm thinking, here's the possibilities. If this is too low, I want to think about being a buyer here. I'm going to go for this, and I'm going for the all-time high. That was my first trade. Let me show it to you. And these trades, so you understand, are Bookmap order flow. In other words, the order flow is an integral part of timing, because now I have structured trades, and these are available in those 60 PDFs you can all have. It's my gift to you in the Trader Lab. So I know before the market gets here, based on my 82% probability, that I'm going to come here. And then I have a choice. It falls out of here. I put my helmet on. This is my next location, outside edge of this behavior. If not, and this is too low, just like it was, look, let me show you consistency in randomness. Why? This is the same thing, but from Friday. And the ETH low is there, too low. So what am I doing? I'm taking a process and following the same process in another, as you think of it, time frame. And I don't use time, I use behavior, and that's called fractals. Same, but not. So no clock, because the clock doesn't define what happens between the participants. So I'm going to now go into the first trade. And I take these trades and others, but I'm going to stick to what I like to do, since I don't have time, is stick to the broad stroke and share structured trades that are available to you. And then it's up to you to vet them and determine where you have an edge. That is the business of trading. It's not what I do, but the Trader Lab, I have shared these trades, and I know you guys think of setups. What I think of them is structured trades, and then you have to vet them, because you're going to see things that show up all over the place, just like when your indicators cross all over the place. But sometimes they're not qualified, and they're just noise. So that's where understanding, like the casinos do, only play games that have a statistical edge. So let's look at the first trade. So this is called the developing volume point of control. This is the same as this, which is fixed, except in the RTH, when we get the open, we're starting at 0 volume. So this becomes, call it a dynamic auction. In other words, it's in real time, and wherever the volume is going, it is suggesting developing valuation. Now this is how this works. Market opens, RTH open, okay? Overnight volume point of control below us, and this is an intermediate time frame, high volume area. Same as this, higher time frame. I don't have time to get into all this. It's all available in the Trader Lab. And this is auction market theory using a volume profile. I don't use any indicators. You might find that interesting, but what I found is I want to stay as close as I can to where I can read, using order flow, changes in behavior. So I'm going to show you how that works. And again, you have to vet these for yourself. And again, post your questions. So right here, the market opens. I see buyers. Now remember what happened on Friday. Profit taking, and who knew, right? Right here is absorption. This is order flow now. And this is a selling iceberg. I see 25 buy stops come out, and this is the absorption. So, and I have more volume here, and this is minutia. I mean, this thing has been open 1 second. So I'm just giving you a sense of development. This is now the retail price. This price in microstructure, and that's what I call it, is too low. That doesn't mean get long, because we're in the open. It means let's follow the yellow brick road. Too high. Now, I don't know until this shifts down. This becomes, now I'm going to label these. Now I'm in microstructure, and I want you to be patient, because what you're going to see happen is really the most important part of this is consistency. The market is random. Let's agree on that, or at least take my word for it. If the market is random, something must be anchored or consistent, and that needs to be you and your trade plan. The casinos are playing anchored inputs. In other words, blackjack is 7 cards, and they play it a certain way. They shuffle the deck a certain, you know what they do if you've ever played blackjack. They don't change the game. The cards coming out of the deck are random, and the way the gamblers play their cards is random. So they're in a random environment just like we are. So this has to be consistent, just like the casino's games have to be consistent. The casinos don't change the games because they pay the gamblers in the last hand, right? We change the game because of our fear and our attachment to outcomes. The casinos wouldn't be successful if they changed the games every time somebody walked out with cash because they don't want to lose. They accept they're in a business. And write this down. Every business has cost of production or overhead. Name me a business where there's no cost to operate, and let's go in that business. But if you want to be in the trading business, you need to reframe. And the reframing has to do with how you feel about it and how you and your actions in this environment of complete uncertainty and random distributions of outcome. Too high. So now we come down right here, and I don't know, VPOC migration. This now is potentially too low. I'm in microstructure, and I'm just putting this on here so you can see it. When this is happening in real time, there's no time. But when you start drawing and seeing things, and I like to do this for you guys, you'll start seeing some methodology. What happened here? Buyers were here. Sellers, the icebergs took the other side. There they are. Boom. These guys were absorbed. That's what the order flow means. When you see delta, and what is delta? Buyers, and buyers can be buy stops. They become market orders. That's what's represented by delta. The purple box is the absorption. Now, what we need to look at in order flow is, are these sellers run over by the buyers who take on the sellers and there's buying above it? Or do the sellers overwhelm the buyers? That's what this is about. And what happens after the fact tells us what happened. So I know right here there's absorption. I know this is my retail price. I see the market rotate off. So I know now these buyers were absorbed here. I come back up. Buyers. Where was my sellers? Here. What was too high? Here. Variable high volume node. I come back up. What do I see? My sellers again. Icebergs. Buyer up here, nada. And another little tidbit. This is the stop and iceberg detector. Up here, I have 5 buy stops. Over here, I have 25 buy stops. If I have less buyers and sellers here absorbing the buyers, what might that suggest, you ask? Stop divergence, right? Less of something, high price. In fact, it made a higher high right here. That's divergence. You guys know that. And absorption, which means there's seller active here. Probably the same one. Who knows? And there's my sellers again. Is everybody tracking? Minutia order flow. Are you guys with me? Okay, let's continue. And what is our retail price from the ETH? 82% probability we come here. So, right on the open, and it's a suspect, I want to get long, and I'm going for the ETH high, because that's a high probability statistic, and the probability or possibility is to take out the all-time high. Remember, what's my statistic? You did write this down. 81, almost 82% probability we take out the previous high or previous low. Well, I don't know about you. I'm kind of leaning to previous high. And again, random. So let's watch. So the location for me to look for a long is out in here, in this area. Because why? Retail price. And we opened above it. And now we can come back and go, is this now too low? I wonder. Let's look. Now I'm going to show you the entry. So we come outside. Now I'm right here. I'm looking at it and I'm going, I don't know. Do you? I don't know. But what do I know? This retail price. Now, is it going to touch it? Is it going to get below it? Guess what? Clueless. I am the clueless one. So I need a trigger. So I have a structured trade and I needed a way in. I'm going to show you the trigger. And like everything, I don't buy the high. I have. I don't buy the low. I don't sell the high. I don't know where they are. So I have to have a process that helps me. I'm going to show you the process now. This is a triggering structure. This is TraderLab structured trading. So my location, and there's no precision. You know, this is like, I always use the term horseshoes and hand grenades, but I think we're within a tick. I come down, I'm seeing my selling going to zero, right? Let's use our stop and iceberg detector. 21 sell stops, buying iceberg. So I'm seeing absorption here. I see my seller. What do I see here? Does this look familiar to the high? Stop, divergence. What happened here? Stop, divergence, reversal. What happens here? Stop, divergence, reversal. Are you guys with me? Now, so I have my divergence, and let me tell you what it's telling me. You see this selling here? Now, there's no way to know. You know, this is part of the joy. Everything we don't know, except I have location and I have sellers. I have stop divergence. Right here, I see a change in behavior. These guys were absorbed, and the iceberg is telling me that too, but I don't know if the selling is over. So this is antenna is up here and here and here, location. I want you to see all the pieces. So now I see buyers above the sellers. Teeth are chattering. Buyers, pullback. Right here, I'm going to mark this, is a micro high volume structure. Guys, think of this like Russian dolls, fractals. This is trading in fractals. Now, when I see this, I can't activate on this. And I go, oh, there's the buyers. Oh, and now FOMO, I'm twitching, all that's going on. So my job is to recognize the trigger. You can learn this in TraderLab. We come back up here. I want to show you. This is the current retail price. It is a form of resistance. And so is this. I get through this one, and now I pull back. This is my entry, and I can't get in here because I'm not fast enough. Let me show you. So this is now the long. Watch it. So let's look again. Sellers trapped. I'm in minutia and I'm spending time so you can see this. Then I'm going to speed along and you're going to see the same thing over and over again. This is trading in fractals. This is TraderLab. This is auction market theory using the volume profile and order flow. So this is too low. There's where the buyers take over. And what happens? I retrace back to where the sellers were absorbed. Here's the beauty of this. I now know that this might underline be too low. I also know right here, I have my sellers and I have support. Right when I see these sellers, so these sellers are here. If they don't take control and get under here and I'm at my support, this is a long. I took this. Where am I going to try to go? I'm going to get here, and then my next target is this. This is and then it's all-time high. Okay, so let's watch now. So scale, stop is under here. Let's watch. Target, having a good time. Going to the moon, Alice. Watch. Now, is everybody with me on the first long? Alan, do you see what we were talking about context this morning? Anyway, I'm going slow and I'm going to go fast. And if I go too fast, you got to let me know because I want to get into real time and I don't get a lot of time for this. So I'm long. I have my first, scaled target, and then I have a runner. Now, in the Trader Lab, I talk about a 2-lot minimum configuration. Subject, and this is what you have to vet. A couple ways to do this. If you get your long on, okay, then you can either just scale and keep your stop under this, the trigger, the retracement and the entry here. That's one way to do it. And just go for risk neutral. Now, the worst that happens is you get taken out, maybe get a Happy Meal, broker sends you a gift basket, or you use structure and then you trail. Or, and I'm only going to talk 2 lots, so let's forget about what I do as far as stacking. So if we're on a 2 lot, this could be your target. Remember, overnight high, you could scale here or scale earlier. You could exit your trade here, or you could just manage your trade. I'm going to tell you what I did, and it's not a recommendation. I was going for wherever it is. I think it's covered this because I don't know. We could just be a bullet train and go up, right? This is part of the joy of randomness. I don't know. If you know, you let me know. So we know the overnight high has almost a 70% probability. And again, past performance, not indicative of future results. You got to vet everything for yourself. So I know that. And I know yesterday's high, because the trend is up, has a high probability also. So that's why I'm leaning north. Now let's talk about trade management. And again, you have to vet this. And I am going to get out of this, but I wanted to take you with minutia through the first trade. So let's look at the behavior. Sellers are here, just so you know. They are absorbed. Buyers above. Sorry, Charlie. Now watch. Buyer, buyer, buyer. Micro consolidation structure. You see that high volume? It is now at the overnight high. So it looks to me like we're going, and I'm getting the champagne on ice. Gonna have a wonderful time. I'm gonna mark this. I'm just gonna show you how you might do this. And it's not one way. Remember what the auction is. High volume, high volume, high volume. What is this? This is a fractal. It's micro structure. That's what I call it. Micro structure. What happened in here? Buyer, sellers are here. Buyer is here. But there's nothing going on here. This is where the buyers are. And I don't know, right here. And I see a seller. And then he's absorbed. Buyers above. You see this little high volume node? What this is right here is actually a consolidation. And consolidations happen in, bigger and micro. So I look at this and I'm going to draw a little box around it. Because I want you to see what's my indicator. No indicators. I do use an indicator. It is the participant behavior, the auction. Because what is really happening in here? Oh, too high, too low, too high, too low. Buy stops. Buy stops. By the way, does that mean somebody is shorting this? Really? Yeah, maybe. Overnight high. Oh, it's going down. Really? I don't know. Could be. But what do I see? Chop, 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 which is a consolidation. They're all the same. Think Russian dolls. The little doll. Break high. If I break high, where is support? It's the volume there, microstructure, and this is where it broke out. Pullback. Going higher. Is everybody tracking? Does this actually would have been nicer? Let me just do this for you. I want you to see this. Hopefully. What's so important, guys, is that you learn to understand how this works. You know, I'm not having much success with this here. Nope. Okay. This, I wanted to draw this out here so you could see it. So this is here. I'm not going to spend any more time of our valuable time trying to draw a line. So let's go a little further. So this is support. This is support because the sellers are here. We didn't get below them, so they were absorbed. Now let's look above. Now I don't know, going to the moon, right? What do I see here that I haven't seen? Absorption. Buyers are being absorbed. Where do you see it over here? You don't. Now this puts the antenna back up. What's going on? Absorption. So I'm seeing sellers. The buyers are absorbing. So I'm okay with that, but I know now I've got sellers. I've got 378 selling icebergs. Now right here, I have no clue except the alarm is, let's just say the alarm is kind of set. So what do I know here? This right here, I should say, is support because my sellers were absorbed here. The opposite behavior is happening here. So I have high volume. I'm going to draw my little line. Again, it's all about you seeing structure. When you don't use indicators, what are you using? What I do is I use the participant behavior as structure. So now I have micro high volume, you can see it there, and my absorption. Now I have no way to react to this at the time. Now, and let me just bring this back. So there's my volume. I also have volume here. So I'm going to draw another line. Now the thing about this is while we're trading, we don't have time to be drawing a lot of lines. But once you understand what it says, remember, you guys look at indicators and whatever, divergence and all that. I'm just doing the same thing, but I'm not waiting for a backwards looking indicator. I'm using order flow, together with volume because of what it represents. So I know right here was the last place, right here, too low. Sellers took a shot and I made a new high, absorbed. So this is really where it matters. I got taken out. So you could be trailing here or under here. That's up to you. Now my trailing stop was really, I'm trying to remember where it was. I have to go look, which I'm not going to do, but it was under here. And then, because this was my support, you see the test. So when I saw this, everything was like a hand on the plunger, and it was right here. So right here is my volume, and there's my volume. I break under this volume, and then now it's really heart palpitations, and right here was the last place my sellers were absorbed. I punched out of the trade here. And this happens, and I'm going, oh, what's going on? So in my plan for today, I'm going to tell you what my plan was for today. It was long to the all-time high, or long to the overnight high, and then something called balance. Balance is rotational trading, and then it's what happens. And what's my next location? Let's go look. I have an outside edge. Remember from the ETH? It's down here. So what do I know from the ETH? Remember? This was the ETH high. Too high, too low, too high, too low, ETH retail. So if I fall out, then where was the last place it was too low? It's here. So let's watch. Before I go on, is everybody with me? Do you have questions? I'm coming up for air. It's like a shot of oxygen. Are you guys tracking? Any questions? Post them now. And please give a thumb up if you're in YouTube. And remember, if you're interested in career development, understanding how the market works, why it does what it does, how to integrate order flow, and build out the business of trading. The Trader Lab's a serious community of like-minded traders that have come together, and it's for everyone, and there is no cost. If you're interested in this, you can download 60 PDFs of structured trades. This is not plug and play. That is not what the business of trading is. If it was that easy, we'd all just plug our indicators in and have an ATM in the basement. And I'm going to suggest not, in my opinion, the way to approach this. So, outside edge, and again, no clue. Let's look at the clues, though. This is the liquidity tracker, and it shows me the adds and pulls. I'm going to remove it right now. I use it in my trading, but whoop. Let me just find it here. Liquidity marker. Love it. But to show you guys what's going on. So now we're coming down, and where's the bottom? By the way, the overnight mid, let me give you a statistic. So I don't know. Don't think I know. And that doesn't matter. Maybe you do. I don't know where it's going to go. I have levels that are auction based. The ETH mid has about a 72% probability of getting there. So I know this is possible. I also know this is possible. This is a higher time frame level. It's a low volume node. I don't have time to go into it. It's just the same thing in an intermediate time frame. The market is fractal. So when you guys think of intermediate or higher time frames, this is just a higher time frame. This is the same as that, except this is higher time frame. So I have this as a target, maybe. I have this as an outside edge in the intermediate time frame, and I have this as the most recent level from the ETH, which is the most current auction. So I'm looking at these levels. The market's coming down. It's going to zero, right? I don't know. What do I see? Let's look again. Coming down, I see my buyers, I see my sellers. Now this is microstructure. Where did this come from? Let me just make sure. Oh, wait a second. Coming down. Now right here, let's look here. Seller, buyer shows up. Does this look familiar? Absorption. Here, going to zero. I'm at a location. Clueless. Buying iceberg. And what is this? Let's look again. Stop an iceberg detector. Lower low. Stop divergence. So I'm looking at this, and the teeth start chattering again. You know how you get a little heart palpitation, a little adrenaline going, and fear. Yes, fear. Do you feel fear? I do. Why do I feel fear? I'm wired to avoid danger. My brain and yours was the reason we might have survived and crawled out of the primal swamp and developed. And if you accept that there might be natural selection, those who figured out, whether you're a worm crawling out of the slime or whatever, that you want to stay away from certain things, if that is part of you, your development, that selection, if you will, would develop this instinct to avoid danger. So if we avoid danger, we don't know, and we are the thing that you feel emotionally is that triggering of fear. And it's great for survival out on the tundra, the savanna, good for staying away from the saber-toothed tiger. So right here, I have selling, I have divergence, I have an iceberg, and I see the break high. Buyers. Okay. Location. This is the other location, higher time frame, and this had a statistical probability. What do I see? Change in behavior. What else do I have? Watch. Too high, microstructure, resistance, break low. So this is resistance right here. What is this? I don't know. High volume microstructure is here. Only in hindsight. There's my buyer. There's my change in behavior. And I'm going, oh, son of a gun. I missed it. Watch. Back to the trigger. Watch. So here, these sellers were absorbed. This is order flow. Now, when I come back here, again, the stomach and the breakfast are on the edge. Why? Wiring. Do I recognize it? Yes. Do I understand it? Yes. Did it take me a long time to interrupt the emotional wiring? Yes. I had to understand it. I had to study it, and I have to interrupt it. I spent actually a lot of time. I do Friday, we did a recap at RTH Close, 3P Central Time, and I talk about the things I do in order to attempt, underline, to manage these elements that will interrupt your intentionality. So there's the sellers. Sell stops. Thanks for playing. We'll send you a coupon to the buffet. So right here, too low. Here's my buyer. Here's my level. I see my buyer. I pull back. This is a long in the Trader Lab. This is my scale. And then I'm looking to come out the top. Let's just watch the problem. And again, clueless. That's the mean. So let's look at this. In the microstructure, this is the store. Think of this like shopping, and it's your store, 8 o'clock Saturday night, pint of ice cream. There's not a lot of volume here, but we do recognize the behavior between the participants right here. If this price, which is highlighted, is too low, and we come back and check it, and I see absorption, and these guys are still under the bus, and I see the buyer, this is a trigger for a long. Now let's come back the other way. What is this? This is the retail price in the developing time frame. Remember the yellow line, high volume. And it's right there. So what I know is, in the microstructure, this is the same thing in a fractal. This is high volume, too low. But what's this in the next higher time frame? High volume. And that's why it's a scale. And the assumption or hope, and that's what you do here, hope, is that we clear it this time and squeeze out these guys and the current high of the day. Take the stops out. So you'd be right here, long to here, helmet. Now your stop can stay under here, or you manage the trade. And let's draw a line here sequentially. Is this too much detail? Let me know, because I will skip this. So right here, too low. Last area is like in here. Let's just watch. This is another long. And what is it based on? I think you might like this. If this is too low, this is the test of this. If this is too low here, and I hit here, then this is the volume here. See it? This is along here, back to here. This is, by the way, there's a name for this in the Trader Lab, and what it is mean reversion. And the joke is, yeah, it's mean because where's the outside edge? This is the hard part of this. So this is the outside edge. That's retail. So fractal, microfractal to fractal, or micro high volume to developing higher time frame high volume. Back outside, this would be your long, back to here. Bounce off, this is support because we rejected this and we rejected this. Your stop would be under here. If you didn't get in over here, you have the option to lean against this with your stop under here. These are all Trader Lab trades. There it is for a long, back to here. See it? Watch. Now what? Where's my stops? Here, the shorts. Thanks for playing. Send you a coupon. And then here, because these sellers now have their buy stops here. Let's watch. See it? This is Trader Lab trading. Then it's all-time high. Any questions? And there's more. In fact, there's a lot more. What time is it? Oh, right here. I'm going to show you this. This is also another long in Trader Lab. This is a structured trade, but I'm going to wait. Questions? Give me a thumb up in YouTube. This is the Trader Lab. This is building out the business of trading, not with indicators, which create randomness and conflict. And you got to understand something, guys. This is the problem I had. And unfortunately, there was really no trader education other than very basic classical bar charting when I started. Indicators were new. I shared an office with George Lane. He actually created stochastics. I thought the Holy Grail showed up, right? So I went down that path, and I kept running into the same problem, which was my results were random. The thing that kept me doing it was that I had winning trades, So what we believe is, and this is part of beliefs, is we believe that indicators are the solution. We just have to get the right time frames, the right mix, right? And that's logical. I mean, this makes sense. The thing is, the market doesn't operate that way. It really operates on the participant interaction. All indicators are doing are tracking some kind of derivative output of price, and they're lagging and conflicting. And most of us think more indicators creates more certainty. It doesn't. It actually creates less certainty, and you have no way of knowing if that behavior that you're seeing with your indicators even has a statistical edge. I can assure you the casinos don't play games without an edge. So thumb up and let's continue. And if you're interested in this and building the business of trading, I invite you to visit the Bookmap Discard Trader Lab community. Download the PDFs of these structured trades, watch the library of webinars, and become part of a community of traders that are serious about being in the business of trading. Now, you have to do the work. You have to vet trades, find where your edge lies. Everybody does their own thing in that sense. And you find what aligns with you, your time frame, your risk, and the rest of it. So let's watch. So right here, I'm going to show you the next trade. Now, this is a continuation trade in the Trader Lab. I want to show you this is a structured trade. And I really like it under the right conditions. Now, we took out the ETH high, right? We have above us the all-time high, which is a target. We rejected the low volume node from the ETH. So we have everything suggesting north. And again, the outcome is random. The first hour's high, let me give you the statistic. This is how all these pieces might come together. And you have to vet these, of course. Almost a 68% probability, past performance not indicative of future results. We're going to take this out, so it's a target. And with the overnight high above us, so that's why we're going for this as a target coming up. And we have something called the IB continuation trade. In other words, in this context, which is north with the all-time high above us, if we get a trade here, it is a long, an add, or initiation, all subject to your plan. Let me show you something a little interesting now. If I can find it. Here it is. This is liquidity. You can see it here. And now this is an algo. It's distracting. It's disgusting. It's noisy. I don't see it. I mean, I do, but it's not an actionable thing. It's just a bracketing algo. You see it? So I always want you to know it's noise. You can filter this out with the Trader Map Pro, but I only can show you one screen. So, but this is resting liquidity. I can see it. This is what the heat map does. So I'm coming up and I have this high probability target. So this is my scale or the end or whatever you want to do. So let's say I'm just going for the statistic. I could be done with the trade here, but I have the all-time high and the trend is up. How do I get into this? Well, we have a structured trade right here. Here it is. So here's my liquidity resting. That's what makes it important. I come up into the liquidity. 764 icebergs, right? And here's the absorption. What do I know about this? I have a triggering structure or a structured trade at this location, and this is the icing on the cake. Sellers, there's the iceberg, absorbed, and we blow through. Now, the trade is set up the following way. You may find this interesting. I'm going to put a little line. Actually, I labeled it right here. This is where the liquidity is. Let's watch. Now, this is a little more advanced, but you can learn this. It's in those PDFs. What happened right here? Absorption, and they failed. So these guys, these icebergs, are under the bus here. So the micro, this is more advanced. That's why, but I'm going to show it to you. Now, if you didn't even know about this trigger, you know in the Trader Lab that this is a triggering. So this is a triggering structure. There's your liquidity. That's where this interacted. It's actually a hair higher. And this is called the IB continuation trade. Break, pull back, long. Let's just see. Watch. Here is your volume. Here is the location. Out here, so there's break high. There's absorption here. They are stuck. Here's the pullback to the volume. Now, this is more nuanced. There's my sellers. And this was my support, sorry. So if I get long anywhere in here, my stop is right under here. Trader Lab structured trade, and then all-time high, and then trade management. So this. Now you're just hanging out. Let's watch. How do you manage this trade? You're asking. Let's see. This is structured trading. This is Trader Lab. Now, I'm going to take you into this. Now, here's what I see. All-time high. Now, it's reasonable to anticipate selling at the all-time high. It's selling the high of the day, previous high of the day. So not unreasonable. So trailing. And these are trades I'd take, plus others, but let's just talk about Trader Lab. So this, notice where the nodes are. Look to the right and you see the node. High volume. And if I leave, these are distributions, and they're really micro consolidations. Chop, chop, chop. I'm just going to outline a couple of these so you can see what I'm talking about. I really think, the best thing I can do for you guys is to help you see how the market works in its purest form. Since I don't use indicators, and I'm actually in a way, all I'm doing is I'm speaking a language of market. I am not using, some derivative of price. Why would I do that? Because I just don't do it. And it took me a while. I want to tell you, it wasn't easy for me to let go of years of indicator work. Elliott wave, Fibonacci's, GAN, hybrid indicators, and I built trading systems because I managed a substantial book of dollars, and I wanted to just optimize. Isn't that what we all try to do? Well, what optimization, and I like to say this is a nice term for curve fitting. High volume. So this is what's going on here. Chop, chop, chop is an auction. There's a price. If it's too low, I leave it. Chop, chop, chop. There's the high volume. If it's too low, I leave it. Chop, chop, chop. High volume. If it's too low, I leave it. Chop, chop, chop. If it's too low, I leave it. I'm going to draw another one out here. I want you to see how I am using a tool. And it's all I'm using is the participant behavior. I'm not waiting for an indicator. I have no time for that. And they're conflicted, they're inconsistent, and what am I going to do with that? It's no good for me. So the high volume is there. So it's stair-stepping up, and it's going to the moon. What is the moon? I have no clue. I'm at all-time highs, new all-time highs. Let's watch the behavior. So the way I use these is now this is chop auction, the high volume. If I leave it, it's too low. Now we're going to another location, chop. If I leave it, it's too low. Support, okay? I'm going to the moon. Who knows? Chop. What happens here? I'm not paying that. I'm out of here. Out of here. What was this? Support. Where's my stop? Under here. What happened? Holy mackerel. I don't know. Do you? I do know Powell is going to be talking at 11 a Central Time. Maybe that's something. That's the last trade for me. So now let's come back and let's look. Let's come back. So I'm going to mark this little thing up here. You know, whether or not we're ever going to come back here, not my job. I have no clue. So right here, let's watch. Just going to mark it. So this takes me out. Now let's come back and look. Now I haven't seen any of this, so I got to take a look at it. I'm coming through this. I come out here. This is high volume down here. There's the mid. I don't have anything right here. This here is important. This is called a variable high volume node, and the volume point of control shifted. Let me show you this. Now, this is a rather high risk long. We are below the mid, below the VWAP. This is too low. Remember how high volume works. Now, this is not a trade I would take. And the reason is I'm below mid, below VWAP, and I might just be going into two-sided rotational trade. I don't scalp. I'm going to show you this, though, because I want you to see something. I want you to see how this works. Remember, this is fractal. By the way, absorption here, 3,000 icebergs going off. The buyers are here. The sellers are there. 431. It's like a battle of the bands. Sellers are coming down. I'm just showing you. Buyers are absorbing. So this is like a shootout. This is too low. Variable high volume node. If I check this, I have the possibility to rotate outside somewhere, and it would be back here. IB. I wouldn't take this. I just don't care about it, you know, because now I'm getting into what might be just chop. So we'll take a look at it. And this is a variable high volume node. So let's see what it does. Could do anything from here. So this is more scalpy. And resistance would be your mid. So let's look what happens here. So this would be, it's not a long for me, but I want to discuss behavior. If this, which is the highest volume at the time for the developing RTH, if this shifts higher, this says this is the new retail price and this is too low. I come back and check it. Sell stops. Look at all these sell stops coming out. And there's some absorption down here. If this is too low, I get microstructure. The problem with this, and I see sellers, not good for the long. And there's the VWAP in the mid. This is a scalp and it's not my trade. Could be yours. I'm not into this. Why? I can overtrade. Now this thing can go up and continue and come back here. Okay. But notice what we've got going on in the profile. Too high, too low. We fell out. Now this is the outside edge of the distribution and we're doing this. So this could just rotate here. So I'm done, but I'm going to show you how it works. Too low. Now you can't execute here, or maybe you can. I can't because I need a trigger. So I see this and there's my alignment. This is the same thing as coming back to one of these microstructures. It's all the same. It's fractal. I am under this, so I know the best I got, well, not, I can't predict it, but I know I can get selling here. So, and the mid and the VWAP. So all of that is atop of me. If I get long, let's look at the trigger. Break high, come back and check microstructure right there against that micro volume against there. That is alignment. That sets up a long, and maybe you'll get here and then maybe out here. I don't have a trade in this thing. So let's just watch. VPOC migration. Now this can very well come out and come back here. I don't have a trade in it. I just don't trade it. Besides, I've already had a pretty awesome day, and it's not my trade. Now, it might be your trade, you see. This is the beauty of trading in fractals. I find for me, I'm just talking me now, not you, me. There are traders in Trader Lab, they're going to trade this. They're whirling dervishes. I find, for me, I want the larger swings, so I have more ability to take stops. My stops run usually the outside, unless it's a situation, 3 points or less. So I can take, and I trade, let's just say more than 2 contracts, okay? So I have to look at it like, I can't get long here. I would be getting long in here. Well, where am I going? Here's my IB high, which is my obstacle to me. So I don't have, this doesn't qualify. Now here's what does qualify. I always suggest, and this is part of developing unconscious competence, that you continually narrate this. What's going on? Because one of the hardest parts of this process is developing unconscious competence, because think of what indicators are. They're really just translators. They're translating behavior and based on some kind of output of price or some derivative of something, you know. It don't matter what it is. They're all the same. So I'm doing it here. So I have to narrate it and look at this. And the auction, so you understand volume profile and all that, what it's based on is participant behavior. It's not based on indicators. And it's a language. So if I can speak the language based on what I read, and this is like translating a foreign language, it is foreign. And we're using Google Translate with our indicators. So I'm just doing it. I'm speaking a language. I got to learn a foreign language. How do I learn a foreign language? Isn't it practice, replays, interpretation, narration? Have you ever tried to learn, a high level skill, whether it's playing a sport or speaking a foreign language or a musical instrument? You've got to get past where you translate it in your head. You have to read it. So this is reading a foreign language. And that's where the time and the learning curve is. And then once you can read it, you can overlay it on a chassis of behavior that you understand that is built in fractals. So what I'm doing right here is the same thing we were doing at the low over here, because that's a fractal and that's the ETH low. So for me, even though anything can happen, it still longs. But now things might change. We might have put in the high of the day. Not my job to know. And the other part is, now we've changed into rotational trading. It's a different behavior. So I have to determine based on my trade plan. I know the market is long, which means there's stops underneath me, as you could tell. We might have the high of the day in. I think maybe, but it's not my job to say it is. And if I get involved in here, I'm going to be trading what's called mean reversion, and I have to respect the range. Is the risk reward? Hey, let's come back over here. Where was the last place? Here, you're going to see something interesting. We come down, there's a pause. Where is it? Mid. And what's right here? High volume. I'm going to put a little line. Now there's a lot going on here because the seller's absorbed. This is too high. Sellers are active here. These buyers over here got run over. Notice what happened here. Sellers were absorbed by the buyers. Sellers were absorbed by the buyers. Sellers are, and this is VWAP. This is retail behavior. Retail traders are very mechanical. Most of them are indicator driven. And remember, gamblers walk out with winnings too. And what I found was when I saw random behavior, I thought all I had to do is make it better. Let's look at the behavior here. Too low, too high. Don't know. So this is support, or a little bit over here, and that's support. And where's resistance? It's right here and here. I don't have a trade. Okay, notice where we come, and I do not have a trade. And these are not recommendations. You may have a trade. And why would I not have a trade? Because of this. So let's just see what it does. And I can't predict anything, by the way. I do know that the market is bullish. So I don't have any shorts in my plan for today. So for me, when I have a short, so you know, and this is not saying shorts aren't appropriate. It's just my personal plan. I want to stay aligned with the higher time frame. It's kind of like advancing army and counterattacks. If the market, write this down, the market goes up to go down, the market goes down to go up. If the market gets long, you're going to potentially get the Acapulco cliff dive and take the longs out. 3,000 icebergs coming down. This is too low. Your choice is to trade here or not. This is resistance. This is support. Let's just watch it. We get VPOC migration. This might be too low. Let's just watch. Too low. Do you see what's going on? I can read this. This is part of learning to speak a language. I don't know what it'll do, but you know what? I know where it might underline do it. And if I know that, does that give me an edge? The next thing is, where are my obstacles where I might anticipate the other side being activated? If I get long here, and I know this was these buyers who absorbed these sellers had their lunch handed to them here. If I get long here or on a retracement, this is resistance. Can you see the logic behind this? Yes, no, maybe. Jamie, we've already discussed the algo. Come to Trader Lab. It's all in there on that algo. And there's a solution for that also. How are we doing in YouTube? Give a thumb up, guys. Helps the stream, and it helps keep the Trader Lab available at no cost. If I don't get thumbs, there's a chance Trader Lab will not continue. So this is your part if you're interested in Trader Lab and what we do. Pull out to the high volume, which is here. Too low. These are potential longs, longs, longs. Stop would be under here. Resistance, remember, is here. Potential long and resistance. These are not trades I can take. You, up to you. If you're a scalper, you could do this. I kind of look at this old-fashioned thought called risk-reward. So what I do is I narrate it, but I don't trade this, as I've already mentioned to you, because it has no edge for me. Now, if these and this behavior was out here someplace, I would have a different take on it. Now, this sets up another trade in the Trader Lab. I should probably talk about it. we have a couple things here, right? We had the IB continuation, that was the long. This is called the IB failure, but I can't take this one either. And you're going to go, well, why not? I can't take it because the IB failure, which is a short from here, is a mean reversion trade. It has the following targets, and it's assuming it's designed to return to balance. The targets are VWAP, which needs to be below here, mid, which needs to be below here, and VPOC. It's called mean reversion, which is here. So I do not have a short, though under different conditions, this is a short. So this is a long, I can't take it, and this is a short, I cannot take it based on my plan. Now, what is the condition of the market? Where's the stops? Out here. What's the potential to come outside, maybe take these guys out or not? And here's support. I'm going to look at this, and the possibility is the following. Fall out the bottom, possible, or come outside somewhere. Part of the joy, don't know. We have to watch our high volume structures here, here, and down here, and look for something called mean reversion, which is outside back here. That's called mean reversion. And I like to stress mean. So this is what might be, and remember, all you have in trading, write this down as maybe, might be in alignment. So what were the trades? Long continuation up here, take out the all-time high. Done that. High of the day might be in. Longs are under here, low of the day at the moment. We can take this out. C'est la guerre. In the meantime, potential to come outside and rotate back here. And then back here or wherever. That's part of the joy. Now we'll watch. Please post your questions. And remember, this is not a trade calling room. I'm here to help you understand market mechanics. The job of the trader is to only interact with the participants when they have a vetted edge, just like the casinos. The outcome of any hand that the casino plays in the games or setups for us that have an edge is random. If I'm looking to trade, I know that this is right now, and this can change, the fair price where the most volume is in the developing daily time frame. If I go down in time frame in the fractals, which is what I do, all the same, Russian dolls, I know that this was too low and this was too low. I know that if I do get long somewhere, this is my target. Now, if I fall out the bottom, it'll change things. And then I'll be looking at my next statistics down out in here. So I know about this. I know about this. I know about this. And I know about this. The same reason I couldn't take this long because of range is the same reason I can't take this long to here because of range. But here's what you can learn. Market mechanics. What you'll observe in the auction, because the auction could care less about risk-reward ratio. The behavior is generic. The range is what we need for trades to qualify. So what I always suggest in Trader Lab is you narrate, because it's if this is too low and that is too low, that was the last location where the sellers got absorbed and we came back here and here. If I come outside and this is still too low, I might come back here. Now I can't trade this range. Well, maybe I could, but I'm just going to say let's not trade this range. Because I have to execute on what do they call it? Like on the edge of a dime. And I'm not that good at it. I need the range to allow for entry and getting risk neutral. But if you understand how the market works, you would understand that along from out here, this is the target. And it doesn't mean it's ever going to get there. We could just as well stop at another location. Let's see if it gets there, okay? I'm I want to take this out. Well, this is kind of important. So let's watch. Too low. Pull back to the micro volume right there. That's why I draw these lines, because I'll forget. I mean, actually, I have other ways of drawing these lines, but I won't go there at the moment. They're automated, but they're not, the eyeball, you got to know what this says and what happened here to have a line here. The chop, chop, chop is the same thing. We're looking for this. Now, I want you to understand that if you can understand, and it doesn't mean it's going to go here, by the way, right? It doesn't have to do anything. This is part of the random nature of this. Let's see if it gets here. Now, here's why is this important to you as a trader? If you understand it and you can speak a language, if this was out here, it's the same trade to there. But you want the range for getting risk neutral. Let's see if it comes here. Questions? And please give that thumb up. It helps. And remember, there's a link in the bottom of YouTube. If you're interested in the Bookmap Discord Trader Lab community, it's available to you at no cost, as well as all the additional education in the Bookmap Discord server. Stocks, options, crypto, swing trading, market maker behavior, algorithmic behavior, a lot more. And of course, order flow with a high tier tool like Bookmap. Got to be conscious of this. So let's watch. So we do have the low of the day. The market can come out the bottom. If it comes back inside, I'm going to tell you already what the potential trades are. Not recommendations, because everything is dynamic. Long to there or not, which I can't take because of range. Come out here, take out this low. If it comes back inside, long to there. Those are structured trades. Now, the other part of this is if we come out the bottom and keep going, then, maybe not. This has already been checked. So this has a possibility, but we have this, and remember what's under the current low of the day, sell stops, and the market is long. So if we come under here, we're either going to come back here, possible, come here, or just pop it and come back here. So for me, those are my trades. And actually, if there was range, this is a long. So just saying, but no range, no long. So you guys can watch this one. And remember, it's not qualified, not because it doesn't fit. It's because of the range and where you get in. So if you can learn to read the language of the market, then the possibility is if this is too low here, and there's going to be stops under here, so we can get under here and then come back. It can do anything. This is part of the joy. This is the target. So I want you to be thinking about this. Just thinking about it. If I fall out under here, then the possibility is to take out the longs and then come back in and come here. For me, the better trade, this trade doesn't qualify. So for me, I don't have any trade here. I have behavior that you can observe so you can learn how the market works. This is what Trader Lab is built on. And if you're interested in the business of trading, I think you might find an edge by understanding how the market works. What does your indicator have you do? Does your indicator understand why this might be a target? Again, not qualified, only because of range, not because of behavior. And the outcome is always random. So I don't know if it's coming here or falling out the bottom. Indicator doesn't know that either. So, So this is what I know. Buyers were here. Those guys were buying over here. I got more icebergs were buying on the way down. Sellers took control of the ball here and here. Now I'm in floating in the down the Nile. I have too low over here, and this is retail. Nature of the markets to come here. Now, if it comes there, that's a lovely thing. You'll see the auction. If it fails, then it's coming maybe down here, and it's one or the other. Let's watch. And if you understood how the market works, you'd be thinking this way, not predicting. You'd be thinking. And I think it's better to think in probabilities and operate like a casino does, because they do really well. Cocktails, give you a ticket to the buffet, maybe see Adele, because over time they extract the dollars from the gamblers, not the next hand, maybe not the last hand, but over the collective random distribution of outcomes. That's how the casinos extract the dollars. This trade is a structured trade, not qualified. And I'll tell you for me why it's not qualified. To me, this is called mean reversion. It's not qualified because I can't enter here. I know this is here, and now I'm going to look here. There's my buyer. The entry would be here. Well, look, if I get in at 93.5 on my best day, where am I going? 95.5? You see what I mean? That's 2 points. Not worth my trouble. In my trade plan. But in your trade plan, you might trade this. And then where might we go? There. And then up here, we're going to look for behavior. Why? Sellers were here. Sellers were here. Sellers were here. Buyers got stuffed there. Let's watch if we come back. Is everybody tracking? You get something out of this? Yeah, hi, Epic. Buy stop basically is a protective order, and it becomes a market order. So if you were short, you would put a buy stop. So if it comes up to the level where you know you're wrong or it exceeds your risk parameter, what you're willing to lose on a trade, it becomes a market order and you're out. And your trade goes to market. That's what a stop is. And they're on both sides of the market. Sell stops here, buy stops here, selling icebergs, buying icebergs. And this is order flow. Too low, absorbed, location, long location to here, and this is your selling absorption, and this is your targeting. This is just a trade I can't take, and I don't call trades. This is a trade you, when I mean you, the collective you, if you have an edge in this range, you can take. For me, this is where I have to scale. So that's what prohibits the trade. This is the next target. So, anyway, please give a thumb up in YouTube. I'm out of time. And remember, you can visit the Bookmap Discord Trader Lab community, download 60 PDFs of these structured trades. You see why? Is this something, if I know, and what I mean by know is I know probabilities. I don't know what will happen. Is this something that would be useful to you as a trader, developing trader? And by the way, I'm going on 45 years of doing this. I am a developing trader. Always will be. Why? Because I want to do better. I'm always looking to do better. And by the way, these streams are available exclusively to Bookmap Discord Trader Lab participants for review. Circles, arrows, screenshots. This is how you learn. Replays, watch the stream, look at your performance. What did you not see? Or what did you see that I didn't see? And you can help me get better. See why this is important? The absorption. What happened here? Absorption. What is it aligned with? Location. Are you guys tracking? This is also a short possibility. So you've got a long possibility here, and you have a short possibility here. This is called the IB failure. This is long up to the IB. because of what we know happened here. These are two structured trades. This one's not qualified, and this one is a potential short to come back out here. Too many trades for me to be focused on and narrate. But this is in the structured trades you can download. The link in the bottom of YouTube will take you over to Trader Lab. There's no cost. Visit the community if you're interested. There's a library of webinars plus the PDFs, and it's a community of like-minded traders. It's a serious community. There is no holy grail. I wish there was. There's no ATM in the basement. The idea is to wait for your structured trades and then act accordingly. Please give a thumb up on the way out. Use the link in the bottom of YouTube if you want to visit Trader Lab. I look forward to seeing you guys tomorrow. And thanks for visiting Trader Lab. Appreciate it.